Good evening, everyone, and welcome to our third webinar. This whole month of February, we've been running a webinar on financial literacy, focusing on investments with Ruben Kimani, who's here, the CEO of Username Investments Limited. So every Thursday between 8 and 9, and for those who've missed any session, they've been uploaded on my YouTube channel. My name is Amakove Wala, and I will be your host for today. Karibu sana, Ruben. Are you ready? Hello, Ruben. Okay, as Ruben is setting up and unmuting himself, for those who've missed the last two sessions, we have been basically laying the ground towards how we can make better investment choices in 2024. So the first webinar was focusing on just a couple of tips. And the second one was now going deeper into what we can do. So today we said, because we've been having quite a number of conversations between Ruben and I, with Ruben taking a lot of the lead in terms of the education side of it, we said that today we focus on a Q&A session, because I think most of the questions really come towards the end, and we are strict on time. We run these webinars at 8 p.m. East Africa time, and we end them at 9 p.m. East Africa time. So asante sana for being with us. The session is being recorded, so you are consenting to that by being in this webinar. But we do this mostly because we want to just keep it for posterity. So Ruben, as soon as you're ready, let me know. Let me give you a glimpse of my own investment journey. So I'm currently 45 years old, and I have basically been putting aside or investing, let's say, since I think campus days, or maybe more towards my work life. That was just after graduation. And there are quite a number of situations where I have had good choices in terms of investments. And then there are quite a number of times where I've burnt my fingers. And most of them have been basically focused on, just a moment, we just get. Basically, they've been focused on a Me Too kind of mentality, I think, for the most part. By the time I was getting some form of financial literacy, it really was much later in life. And I really, really wish we had some of these sessions when I was much younger. So an example would be when I started working in 2003, and that was internship because I'm a medical doctor. I had one of my colleagues approaching me. I think I was doing my internship at PCA Kikuyu Thogoto Mission Hospital. And I remember very well, he told me, Dr. Wala, I want you to sign these forms. These forms are for the SACCO that's for medical doctors. It's called KMS SACCO. And I want you to start saving right from this internship period. So I didn't really understand much about SACCOs, but because, well, he had the forms there and he was, right on my neck, I signed up. And I'm telling you, that's one of the best decisions I ever made. One, because it gave me some discipline in terms of putting aside funding for saving within the SACCO, but also I was able to borrow from the SACCO for many of the things. One, my own development, purchasing some of the assets that I have, but also taking myself back to school. So that is a positive thing about investment. Another one that I had was, I think, maybe 1 or 2 years into working. Again, I got some insurance people who came and said, a lady who came and said, you know what, put aside money in this unit trust. And in 15 years, you'll be able to mature and you'll be able to get your money. And at that time, 15 years sounded very, very, far off. And I said, okay, because she was very persistent. So I signed up and I got used to that money. In fact, the first 3 years, we signed up two of us, and one of my friend pulled out because I think the first 3 years went very heavy onto the administrative cost of that fund. So she was like, all this money, like 70% was going into administration. But I persisted, and I was very pleasantly surprised at the end of 15 years, which is like a 3 or so years back. I got a call and I was told, by the way, your unit trust is maturing. Please let us know when you'd want to collect it and then roll over to another one. So that's a positive thing. Then I'll go to one of the negative things, and I think this is where Ruben will really come in handy. So it's about property, and I remember putting aside some money, and then we were purchasing property in a group format, and that was for Medix. And I put in this money. I did not even know where this property was, and it was quite a substantial amount. And then at some point, I forgot, like I didn't know the processes. That time I was still married, so there was a lot of due diligence that I relegated to my spouse at that time. And then, at some point I got a call and I was told, you know what, we are auctioning this property because you did not pay infrastructure money. I didn't even know that it's a separate cost at that time towards the purchasing of that property. So it was really something that really took me aback. And I had to scrap and scrounge and get that infrastructure money. It was a very significant amount. So these are some of the hidden nuances. And right now, the property where it sits, it's almost 10 years later. We are yet to, it's now when development is happening, because there was some wrangles within the company that was managing them. And I remember many people saying, you know what, we put our money into something and it all got, drained out. And so many of them had, for me, it was more about speculation. But for many others, they wanted to put up their family homes in those properties. I'd also mentioned a couple others, but I think, Ruben, are you now back on? Because we do have conversations that really need to be had. And it's very important that for those of you who are listening in or watching from wherever you are, it would be nice. It's an interactive session. So tell us your stories. You can use the chat function there, the Q&A function. Or on Facebook, we have a team that's monitoring the Facebook Live that's on my timeline. Please share with us questions. So Ruben, I am happy to have you back today. Please switch on your video. Great. Are you on, Ruben? You can switch on your mic. So for those
Yes,
of you...
I am.
Karibu sana. Good. Umeenda kinyozi leo, Ruben? For those of you...
I'm ready for this.
Okay, good. So those of you who don't know Ruben Kimani, he's carried so many accolades around the investment. His background is in IT, but he's the current CEO of Username Investment Limited, and I think he'll tell us a bit more about that. He's been our guest for the past 2 sessions, so he's built up the momentum, and I think he's best placed to be the one to do the Q&A. And what you want to do, Ruben, based on my experience, I don't know if that's what you typically hear, where you have some disposable income, and then you get to hear about this fantastic idea and you put it in without any knowledge. I don't know whether you have any experience from your own end, Ruben, before we delve into the questions.
All right. Anyway, good evening to all our viewers today, our audience today. I'm glad to have you back. Lide, we had a very fiery session last Thursday, and even the other Thursday, which was more or less an introduction. Because you have asked me a direct question, there are people who are new today about Username. I'm the CEO and one of the founders of that business. She has mentioned about my foundation, but I think that has a lesson, and I think that's some of the things that we should be able to share today for the benefit of the listener. I think it can actually help you to also know that there are things that clearly you can be able to do, regardless of your foundation and stuff like that. Issues to do with the investment and finances, we started by saying they are personal, but at the same time, there's a video I did the other day about why we have scams. Clearly, one of the reasons is because of lack of financial literacy. Our literacy levels in Kenyans are very high, but financial literacy, I think, is not very good. I think we are very low, and you'll find that most people make decisions based on street knowledge. What you hear your friends, your relatives, and most of the time you have bits and pieces of information, especially about financial literacy. Unless you have a clearer picture, you connect the dots all the way. You know what is about circles, you know about shares, you know about real estate, you know about bonds, all these things, and you know all the pieces of information. Most of the time, you'll not make the right decision. So coming back to story, of course, I have had many stories about people who make decision on the rush. I want to mention today that of course, we are starting with some good news about from yesterday to today, the dollar, for those who do a lot of import business, I think it just dropped by how many? Almost 20 shillings. That's a huge, and I don't know where it is heading. And I saw a photo. I don't know whether it is fake news. We have many fake news of people queuing in SBA. They are selling the dollars they have. I looked at it and laughed because if this is true, clearly, that's why we need financial literacy. Most of the decisions should never be made in a rush, especially about money. Money is jealous. Money is has some level of integrity. You touch it, it behaves in a certain way. It doesn't matter how you are feeling. It depends on the conditions of the market that you are trading. Like this one is Forex. I know people are rushing to sell their dollars, but a good investor possibly would like to think about the short term, medium, and long term. What would happen in the next 12 months? You're able to think like that based on the knowledge you have, and be able to make a better decision. It cuts across board, including for real estate. Definitely, I've made my mistake as well. So that I don't take time. At some point, I learned about financial literacy. I even did a course in 20 what? Recently, a good course in 2021. I actually realized I did not know a lot. I knew bits and pieces, and Lide has helped me to shape the decisions I make, even in terms of leadership of user investment. This is more of an investment organization, more than real estate. People don't know that. More than 50% of our customers are investors looking someplace safe to put their money for it to grow. So I don't know whether I've answered your question, but I think we can start from there. Welcome to our audience today. We hope to have a very good Q&A. Shoot those questions, right? I'll try my best based on my knowledge, to be able to at least help each other.
Thank you. Thank you so much, Ruben, for that introduction. We also welcome other people to comment, so it doesn't have to be a question. You may be also answering someone. So I'll start with a question that's popped up in the chat on the webinar as my colleagues look at the Facebook side. So this is someone who got a permanent job 7 months ago, and they want to save up for a cosmetic procedure that is not covered by insurance, and so everything has to be out of pocket. One, their net salary is at 7,000 per month, and they are looking at raising 1 million Kenya shillings. They don't have a lot of responsibilities, and so they can squeeze 20,000 shillings into the savings. What investment direction does this person need to take in order to raise the amount in the next 5 years? So 1 million shillings in the next 5 years, saving at 20,000 shillings a month. They have so far saved 200,000 in the 7 months that they have been employed. This is very impressive. So this is very interesting, Ruben. So this is someone looking at saving towards a procedure that they'd want to do in 5 years' time.
This is very interesting. Keep bringing those questions, and I'll try my best based on what I think someone can do. Remember, I want to recap from our last conversation that we had very fast in 1 minute. Of course, we started by introduction, but I wanted to say we started by saying financial literacy and finance matters to do with personal finance is very personal. And we also said you need to think, you need to question, you need to come up with your why of the reason why you really want to be wealthy, to be rich, to have money, to make all those things. And you have to define your success. We are very different. And I think that's where this question is coming. But also personal finance. There are so many facets of personal finance. There are so many. We can talk about retirement. We can talk about careers. We can talk about things to do with succession. There are so many facets. I think there are like 10 or so, right? Very important. Once you understand, you're able to balance issues. So having mentioned that, and I would like to, having mentioned that, I can be able to pop in. And I would say this, because personal finance is personal, also investment. No answer can we can't comfortably, I can't comfortably say there's an answer that is perfect. Usually we give guidance, right? Then in terms of what you need to do, most likely based on that guidance, you can get the specifics of exactly what, but the concept is the same. This person is talking about doing a cosmetic procedure. I think that's what caught my attention most. When finances are mentioned, the why is so important because you can actually decide to save to go to the for a holiday to the moon, right? But let's start by asking why would you like to do a cosmetic procedure? I think that is more or less a moral question and of course a beauty question. Someone may say it is not related purely to finance, but it is because this cosmetic procedure will also affect, it might even cost more than 1 million, assuming it's just 1 million shillings. It will affect many other decisions that you do. The matter of priorities come in, right? There are things that should be done before the others. The moment you're able to define the reasons why you are trying to do investment, the reason why you are trying to get wealthy, maybe you want to have a good life, you have to define what a good life means to you. If a good life means this cosmetic surgery, then it makes sense. But you need to define your priorities first so that you know whether this is what you need to save for the money first. The methodology to do it, I think that should not be very difficult. It's the same advice we give when you are telling you can actually save and buy a plot of land. You need to think by doing this procedure, how is it going to help you achieve your long-term financial goals or life goals? If that is the most important thing to you, then that's okay. But you really need to think about the why. If that, let me repeat, if that is really the most important thing to do, that is okay. But most of the time, you might find that there are other higher priorities than that. Assuming you have children, for example, of course, they come first in terms of their education, investment for their future, such things. You need to do a list of your priorities. If it comes first, that's okay. But it doesn't come first, you need to channel that 1 million shillings to what is on top of your priority list in terms of things that will really matter to you in the next, say, 5 or 10 years or long term. But in terms of the methodology, let me do this very fast because I believe the 1 million shillings can also be used for other purposes, right? You can buy a piece of property. You can actually invest that money into a bond. Today they released that bond, that infrastructure bond, where they were paying 18.46%. Imagine every year is 1 million. You can make 186. That by the way, that's why it is very important to understand something. Assuming what you want is passive income, I'm doing some calculation. Yeah. divide by 12, and your salary 15,000 per month. You had put it in front. But how do you raise a million shillings? I usually advise, very simple advice. I feel like the first thing, and this is something I did when I joined employment. I wasted 1 year, then I learned. You join a SACCO, especially if you are employed, even if you are doing small businesses, even big businesses. SACCOs give you loans at a lower interest rate, and you can borrow 3 to 10 times your savings. And it is much easier than the other. It also inculcates the saving culture in you. And for SACCOs that can give you up to 10 times, the means with I'm looking with a savings of 300,000, you can actually be able to take an affordable loan of 1 million shillings. But you need to buy an asset. Like we said last time, whatever you are buying, you should actually get an interest or a return higher than the inflation at that moment. The inflation right now is at 7%. Anything more than 7% is welcome because you are making money, right? So I'm trying to say one of the easiest ways I usually see people do, join a SACCO, save, and you can do it via bank loan, but a bank loan is too expensive. And it keep fluctuating. Right now, they told us they have gone all the way to 20%. And then if you do amortization, you realize you are paying so much money that your salary cannot afford. The beauty of SACCO, they don't do such things, and you are safe. So if you are paying like 20,000 per month, that is what you'll be paying throughout. Maybe in a nutshell, that is one of the methods among many others that people use. The other method, of course, especially for properties, that people do is they come together as a group of 5. The burden become lighter, but where this objective is concerned, you see, this is very personal. I don't think people will do that. There's also the other method for, especially for real estate. You come and negotiate an installment plan where you'll be paying with your salary. Your 20,000. Actually, you can be able to buy, assuming you have per diems, you have for employed, because I was there myself, I can tell. You have overtime per diems, you can get a deposit, then you put that 20K per month, negotiate 1 yearly payment, you can own some property somewhere. In the next 5 years that you have mentioned, that property, assuming you buy it for 20 times 12 is 240, and you have a deposit of 100,000, we have properties that you have sold for 300, and they have appreciated to almost 1 million in 5 years. We have that property in Gong and in Nakuru, but right now the prices are way higher, right? So what I'm trying to say, there are so many ways of killing a cat, and that's why financial literacy is important. I was trying to address the matter of, number one, to recap, is think about your priorities. Number two, the way to raise 1 million shillings or even more, there are so many ways. For people in business, that's different, and I think that's a different discussion. But I hope I've really tried to answer. And actually, sorry for that. They have managed to save this 200K. This is already a deposit for a property that in 5 years can appreciate 3 to 5 times the original value. You can actually make that 1 million, but you don't want to blow up that 1 million on something that today is not a priority and has no bearing to what your future portends.
Thank you so much, Ruben. We have a question from Awar from Facebook. She wants to know, please explain to her some basics about the stock exchange trade.
Okay, thank you for that question. What I would say about stock trading, I would first give a disclaimer. This is an area where I've done some training, but in terms of all the information, in terms of giving you very up-to-date information, I refer people to experts. You can actually go to the stock brokerage firms and get someone who really understand about stock trading. They sit you down. And when you get courses, there's a time I did a course in Nairobi Stock Exchange. They do courses, I think every quarter. And I think that's a course you can pay. They are not extremely expensive. But even if they are in your own scale, that money is not a lot compared to the investments that people are making. Having said that, based on the information that I have, the first thing I know you must do, apart from training, is that you have to have the right tools for you to be able to invest. In a tool set, you need to know how to open a stock brokerage account with a broker of your choice. Of course, you need to have a CDS account. I want to believe you have a KRA PIN, those basics. I did KRA PIN. You have a bank account. Now you get a CDS and a stock brokerage account. Some of them are online. These days, you can actually go there and open and then get that account so that you can be able to start trading. That is important. But the other basics of the science behind stock trading, and that's why you need a lot of training. Just give the basics as I know them. One of the things I know about investment across board, even in stocks, even real estate, that's the basics. You only need to understand, number one, what you are buying. Don't buy anything you don't understand. That one is a fact, even in real estate. And I want a shamba and understand why you need to buy that particular location. What does the future hold for that location? The shares is the same. Understand the business, the company that you are buying from. Assuming you are buying from Safaricom, the share. You need to understand the basics behind Safaricom business, because share trading, let's say this, asset trading, whether it's share, real estate, is long term. We say that in our last week, if you are there, always focus on long term for you to make the highest gain. Because it's long term, especially for share trading, you need to understand where a company is going. For example, in Safaricom, we know they have been investing in Ethiopia, and that is an expansion plan. The other day, they reported that they have hit a target of 3 million M-Pesa customers. It means, and Ethiopia is bigger than us. It means over the years, this business will grow. What does that mean? Maybe the dividends will start growing. The asset capitalization of this business will keep growing. The share is at 13, it was at 45. What does that tell you? In many years, this company will, they are called growth stock, and that's why I'm insisting you do those specialized training. The other thing about stock trading, which is also true for real estate, you purchase when the markets or the company or the piece of property is priced lowly. And that's why we do affordable properties, because we believe if you get it in the right location and the prices are lower, that is a perfect recipe for an appreciation in future. If you buy overpriced properties, like if you're buying a property in Runda at say 50 million for half an acre, by the time it goes to 60 million, it takes so long unless something drastic happens. From 50 to 60, that is 10 out of 5. That's like 20%. It will take so long. But for a property going for 300,000 shillings, can double in price in even 3 years, which is 100% gain. So you just need to buy many. For stocks, is the same. Always know the stocks that are priced lowly. And how do you know that? That's why you need a training. There's a way you read accounting books. Not as an accountant, you understand books, those financial statements they put in the newspapers. You can actually tell companies that are undervalued in their books. And there are quite a number in our market today. It means over time, their share price will still go up. It's like buying a house that is worth 20 million, but in their books, they are saying is worth 10, but the real value is 20. So those are basic of stock trading. So you need more understanding so that you understand, so that, and it is long term, so that share ikianguka leo, you don't get pressure tomorrow. And that is the norms of life. But over time, if the basics are good, if the company you are investing in has a future, you still keep eating dividends, and as much as going down and up in the short term, in the long term, it will go up. Those are basics. I cannot be able to cover everything based on my understanding, but I want to refer someone, especially Nairobi Stock Exchange, Securities Exchange. They have courses. I would like you to sponsor yourself for one. It will really open your eyes.
Thank you. I think the bottom line is invest in what you understand. So we have the questions flowing. So Ruben, you'll be a bit more
I'll be faster.
Yes. So I'll be alternating between the webinar and the Facebook page. We have two questions on real estate. I don't know if you can combine both. So one is someone who's debating between buying a 2-bedroom apartment in Athi River costing 4.5 million with a rental income of 25,000 shillings per month. Compare that if she put that same money, or he or she put that same money in treasury bonds for 10 years. And the goal of this person is to have a high return on investment. Then there's a similar question, but still on real estate, so that we bundle them up. This person has a long-term plan for a project of about 40 million to build a block of apartments. They have the capacity to save around 250 to 300,000 a month, meaning per year accumulating 2.5 to 3 million. So they think it will take more than 10 years to finance this project. It will also mean that they can't do anything else to diversify their portfolio. Would you recommend that they go for shorter term goals alongside, or do they focus on saying, okay, my target is 40 million, I want to get into it, I'm not going to do anything else? Is this even doable? So Ruben, I hope there are not too many. So there's one person who's debating between two types of investments: a 2-bedroom apartment at 4.5 with a rental income of 25,000 a month, or putting it in treasury bonds. And then there's someone who's debating on whether they need to focus on a long-term goal of 40 million that would eventually take so many years, or they can diversify into shorter term goals. Thank you.
All right, thank you for that question. I think these are very personal questions. I'll share the guideline, and it is important. I read that question again so that I answer it correctly. Would you recommend buying a 2-bedroom apartment in Athi River costing 4.5 million and has a rental income of 25,000 per month, compared to investing the same in treasury bonds for a period of 10 years? The goal is to have a high return on investment. Let me say this very fast because you don't have a lot of time. Return on investment is important, and you have to know how to measure return for any investment that you do. They are called asset classes, whether you have real estate, treasury bonds, and stuff like that. What I would say is, because this person is looking at return on investment, for real estate, this apartment, we are looking at rent. For treasury bonds, we are looking at coupons. Let me look at the current rates that we have. A 2-bedroom apartment in Athi River, I don't know how much you get for rent. That goes for 4.5 million. I know some in Great Wall Gardens. I don't know whether you'd get maybe 30,000 to 40,000 or thereabout. And remember, you invested 4.5 million. For a treasury bond, right now we are talking about 18%. So you just need to do that calculation very fast. And I said the other day, for every 1 million you invest in a rental property, this is the formula you use. Of course, it's a return. We use 10%, but for every 1 million, you should get 10,000 per month. The lower you get, for everyone, 10,000 per month. So 4.5 million, you should get 45,000. That's a return of 10%. But I'll be very blunt here. Most of the time for rental properties at the moment, the return for bonds is way higher. It can actually be 1.5 times. I'll give an example. If you put 10 million, or we use this example of 4.5, I'm avoiding taking so much time answering this question. If you do 18% of 14 point, I have a calculator here. If you're an investor, a calculator has to be next to you most of the time for you to do calculation. If you do 4.5 million at a rate of this is 18%. 18%, we're talking about 810,000 per year. You divide that by 12. We are talking about 67,000. The highest rent you can get from this 4.5 bedroom, because I know at River, possibly is 40,000. Remember the service charge, water, and all those things, maintenance. Clearly, a board will give you a higher return. But that answer is not that simple. Why? Because personal finance, it depends, like we said in our previous video. You might be retiring. And remember, when you put your money in treasury bonds, you lock yourself. If you sell it in the secondary market, I hope you understand, you can sell it at a loss. You can lose a lot of value. Unlike real estate, where you can buy the house at 4.5, it can go to 7 million. That is the difference. So either way, you really have to first understand why you are doing it. But if you just need passive income, the bond is better, right? It gives you 67,000 per month. The house cannot even give you more than 40 from my own understanding. So you get a better return using treasury bonds. But if you are this guy who flip things, properties, you want Airbnb and all those things, this house may be a better option, and the house can go in 10 years. It can go from 4.5 to like 8 million or thereabout. So do the calculation, but first understand what your personal objectives are. Every of these asset classes can serve different purposes. Let me go to the next question. I have a long-term plan. I have a long-term plan for a project of about 40 million to build a block of apartments. I have a capacity to save about 200 to 300 K per month, meaning per year 2.5 to 3 million. It also means, meaning it will take more than 10 years to finance the project. This will also mean I will not afford to diversify my portfolio. Should I look for shorter term goals alongside? Or should I focus on my dream? I would like to minimize or avoid loans. Is this even doable? Everything is doable. Let's start from there. That is the first spirit. Yeah, once you learn about personal finance, you said your why should be very strong to make things doable. Reminds you every single day why you are doing, why you are working very hard, getting overtime, and all those things. Very important. Now, this person is wondering whether they are going to lock their capital. Very important. By the way, and even people in real estate, that is usually the problem. You are afraid you lock your capital somewhere. And what I would say is they are looking for shorter ways of making money. Let me go back to the reason why you are doing this investment. Is it for retirement? Is it for passive income? Because the moment you do a flat, what you have done, you have put like 100 million of this 40 million. What you are focused on is rental. You want a stable income. Stability here is more than important than capital gain. Stability is more important than quick returns. You need to choose. If your objective is stability, I think you can focus on really building this flat. Because at 40 million, the flat can give you about, do like 5-10%, 4 million per year maximum, divide by 12. That is about what? About 350 or thereabout. 250 or 350,000. If you are, is a question of stability and that's what is guiding your decision, I think you should go for the flat. But if you really want to grow your money, that is not the route to go. The route to go is to invest in assets that can give you capital gain. And those assets are not flat. Flat are for passive income and stability. These assets are different and they are slightly more risky. That's how you double your money. Number one is land, and that's what we do. Affordable land in strategic locations. This called selected in the state. I talked about that project we sold in Gong at 259 is going for 800. Another one, 399 Nakuru. People are building their houses is going for, currently we are selling plots and wholesale at 799. But other people sell for 1 million shillings. That's how you double your money. In 10 years, People who have invested in plots of land in the right places, not in some funny bushy places, next to bordering some countries that are very dry, not in a bad way. Those ones may not give you the return. The other way to double your money is through things like stocks and shares. But this one, you really need to understand how companies work, how the stock market works, because the same way you can get money, the same way you can lose it. I have taken so much time because I know the other question may take the same bearing, but look at your objective, personal objective. Zinakuwa kwa roho, eh? Some of them are very emotional. Eh? You just want stability, peace of mind, to be making income without working. You understand that? You go for passive income. But if you are a risk taker like somebody like me and you really want to double your money, you can actually build this flat in year 8 after you have doubled your money. You have learned the art and you have to go for asset classes like land in selected places. Houses don't appreciate too fast like land. Affordable land, not any land in Runda. This high-end land do not appreciate much. Or you go for stock. For example, some stock can move even like 5 to 10 times. But please understand how they work. We can go on. I have taken too much time. Go back
Thank
to
you.
Daktari.
Thank you. Yes, thank you, Ruben. I think I can relate to the emotional bit, and for some of us, I think there's a session I went for that talked about money trauma, and where you may be coming from a place of, let's say, extreme poverty or reasonable poverty. I don't know whether reasonable is a good term. And so your habits around money are based on your upbringing. Or you may be coming from a place where your parents really had a lot of disposable assets. And so you did not also get into the discipline of understanding how hard they worked to get to that money. So our money habits also have a lot on the emotional side, which is more or less pegged on our upbringing. So let's also analyze some of the decisions that we make that may be stemming from that. We have a couple of questions on T-bonds and T-bills on money markets. But I want to focus on one that someone has asked about, the current government bond coupon, because it's a trending topic. So maybe you can touch on that as you touch overall on T-bonds and bills. A quick one, what's your take on the current government bond coupons? Yesterday, they released a March 2024 paper at 18.46%. Traditionally, bonds have been known to be the most secure and low-risk investments. However, with the new rates, do you think the bonds are sustainable, or are we headed the Ghana way?
All right. I think for those who have been watching and listening to news and all these bloggers, I want to first say this. And we'll keep going back to the same. I'll say it and I'll not get tired. Those who have not done any course and there's someone asking about that, Maureen Kariuki, you need to learn about financial literacy. It's a course that is done. I know many players. Allow me to mention, and I'm not advertising for anyone. I just usually tell someone, I'll just recommend someone, but it is your work to do checks and background due diligence, check whether they fit what you'd expect, right? If you take them, it's your own personal decision. I know there are several companies offering this. Let me start there because this question has a bearing on financial literacy. For you to understand on a deeper level how things work, you need to do some form of training, and you'll be able to make wiser and better decisions. For financial literacy courses, I did one course with Dr. Ali will allow me to say this. I'm not advertising for them, but I believe they have really tried.
Go ahead. Go ahead. Yeah.
Yeah. There are guys called Abojani. It's actually a friend of mine. I think you know that.
You'll type
Yes.
it down.
Yeah. I also know the Centonomy. I've not worked I've not done their courses, but I also know they might be doing a good job from what I see in the media. But I want you to go and search for yourself. I did one with Abojan myself, and I've done many other courses, right? Please go out there. Let's go back to this question of whether we are going the Ghana way. These are opinions, by the way, and I'll share what I think, right? Of course, every investment has a risk. And that's why it's personal. Watu watauliza maswali mingi. Every investment has a risk, including those bonds. Lakini traditionally, you have been trained in estate, bonds. The level of risk for bonds is very low, which is very true, by the way. But there's also that risk of going the Sri Lanka, the Ghana way, depending on the government of the day, on how they manage the economy. Those are realities of life. Lakini, we also check the risk levels. And by the way, in the previous conversation, we talked about everyone should understand their level of taking risk so that you know what you can do and what you can't. Those sentiments you hear in the media, it's good to listen to them, but I've also learned in financial literacy that you have to really vet your source of information. If your source of information is some bloggers who thrive on likes, views, they thrive on controversy, you'll always have your blood pressure going up. Always look for the right sources of information. And what are these? These are regulated platforms. If I want to know about the dollar, I go to CBK, right? I know it went to 140 in the banks. If you go to CBK, is at 153. I checked today, right? If you're looking for information about stock, you go to Nairobi Stock Exchange. Capital Markets Authority, they have their own website and they publish reports, by the way. Some of them are done monthly and quarter. You read them with a lot of discipline so that you understand what is happening. Some of those reports are not based on, and when you do financial literacy training, you know how to interpret reports. They'll show you for you to know about coupons, nini. This is the right place because there are people who blow things up. And you might actually, when you go to a radio station, TV station, they bring people who just blow things up. If you don't counter check that information, very important. Your source of information is important. Let me answer this question about going the board way. I was talking about every information having a level of risk. And since 1963, when the government started issuing these papers, it has never defaulted on them. Never. Of course, it doesn't mean that can't happen, but the rate of that happening, in my own view, might be very low. In my own view, despite everything people are saying about government, right? That is my own view, not to say that it can't happen. So you evaluate the level of risk in every investment that you are putting in. That's how I work. Even the businesses we do, even all the investment I put my money on, I use my knowledge I've acquired in financial literacy to evaluate the level of risk. And of course, getting the right sources of information. That's what I would say, but you can judge for yourself. Get the right sources of information. I think you'll be able to answer that question better. But if you are investing in those bonds, I don't have a problem. You should go away. Even, let me say this, even pieces of property, even a house, of course, it can get, that's why you do insurance. It can get burnt, right? You tell me about anything, I'll tell you what can go wrong. So evaluate the level of risk in the investment, and then you'll be able to make the right decision.
Thank you, Ruben. I usually tell people, if the government defaults on the T-bonds and bills, then we are all suffering, whether you bought the bond or not. So
that is true.
And it's the last thing to do before a government really collapses. So this is very long, and I hope your answer will be short because there's an interesting one from a very young person. But this is someone who's posted way back. So this person managed to purchase a total of 4 plots over the last 10 years with per diems from his or her employment. However, these plots were sold by the SACCO and are located in the following areas: Isinya, Itengela, Emali, and Kilifi, the places that you mentioned about heat. However, the value has hardly appreciated. So they've bought 4 plots through the SACCO over 10 years. In addition, the person has bought 2 plots in Tigoni and Ruiru, using again a SACCO loan. They intend to develop the one in Ruiru, and that's from July of this year. They have SACCO shares worth 2.3 million, and they intend to take a loan against that for construction. Their job is contractual, and so they have a fear of the unknown. Basically, the contract is 2 years renewable. They are the sole breadwinner for 2 children, and they also have educational policies for them. What avenues does that person have towards construction of a home? What other avenues in terms of financial borrowing? They are 41 years old. So let me summarize. Over 10 years, bought 4 plots through the SACCO in the areas listed. They don't feel like the value has appreciated, but now they have 2 plots, Tigoni and Ruiru, and they have a plan of developing it from July this year. In the Ruiru one, they have shares worth 2.3 million, and they'd like to take a loan from the SACCO, but their contract is 2 years renewable, and so they fear the unknown. They are 41 years old with 2 children. Thank you.
All right. Sorry for that. Someone was calling me. Anyway, that's the let me say this. This looks like, I would like first to appreciate the fact that this person is extremely industrious. This looks like a very focused person, whoever it is. They have done quite a lot, and I think it's good to clap for them. Tap in the back, they have really been investing. Let me handle the first part. I talked about when you're buying plots of land, because you have done this for 10 years, what matters is the location of that property, because you are buying them for capital gain most of the time. And we are very good in this as username investment. I wish you bought with us, but that notwithstanding, I know Isinya, I know Kitengela. It depends on exactly where those plots are. We really try to sell plots touching tarmac, and we have projects. The 3 projects we are selling are touching tarmac at the moment. 2 in Nakuru, 1 in Kisumu. Actually, there's another one in almost sold out in Garissa Road at Matu, touching the highway. This one, we do this because those are the areas that develop and the prices go up. So it depends whether these plots in Kilifi, if they are touching tarmac, I think the value may have gone up. Those are places people are doing petrol stations. They have demand, right? People are doing homes. You don't want to get inside there. Having said that, this is another story of Tigoni and Ruiru. And I can see they already have shares worth 2 million, can take a SACCO loan for construction. These plots in Tigoni and Ruiru, I think these are quite pricey in terms of plots. Then I'm saying this so that I can. These are a lot of stories. Now, what I would like to say, I usually go back to the basics. I may not have a perfect answer for you, but I usually go back to the basics of defining exactly what you want to do. I have seen people who, like, for example, the thing of building a home. There are 2 good reasons for people working very hard. Number 1, they want to get passive income. And number 2, it's called a home basket. They want to build a home for their family. Most of the time, you can start with the other one, then you go to the other one, right? You can start with passive income, then you go to the home. There are those who start with the home, but it will take you a lot of money, then you go to passive income. Those 2 things. So it's good to question what your priorities are. I always go to those basics. I define what are my priorities so that I know whether directing money to building my home is the right thing to do at that moment, because it will cost you. It will take a lot of your money that you would have put in the current board that is giving you 18.46%. You can't do that when you are building, right? But remember, we all work hard to live a dignified life. So a home for your family might actually take president at the same time. So it's upon you to define what is important to you. Having said that, and this person is also in a contract, you see there's a risk that the contract may not be able to be renewed. But I can see they have a lot of properties here. I would say this, and I have done this in the past. If you realize these properties are not appreciating, sometimes you cut your losses, not to say they will not. And properties require you start selling early. You cannot liquidate fast. I feel like if I was in a similar position, I think I will try to liquidate some of these plots. And of course, liquidating is a totally different business. It might take long, but I know these plots I still liquidate and then put money in a place where I feel they are appreciating, or uh, um, I can be able to sell them out later if I want in a fast way. So hizi plots zote, the ones I Isinya Kitengela, I would start by selling them. Even if it takes long, anytime I sell it, I forward my money to a place where my current objective is. If you are building your own home, when you get 500K from Kilifi, unaiweka hapo. But if you are not able to sell it, you should have another plan, a backup plan to know exactly how you are going to do that. You are taking a loan, but you are saying you have a 2-year contract. I don't know whether they'll approve that loan in the first place. It also depends with your income. But the best way for me is liquidate some of the assets that you think are not giving you a high return. Is in a plot. That's the best way. So that you put that money, either assuming you also want passive income or you want a home for your family. If a home for your family is where the priority is, you put your money so that you don't build with a loan. These are shares. I think you can also consider selling some of them. But I said depends on your objective. I know that to be true. That objective is what the driving force behind all the decisions that you are making, so that you focus. What I've been doing for some time, even before I did financial literacy training, I used to target one project that is important to me. Then I focus all my resources there. There's a time I used to work with tunaita baba na mama pa Safaricom. Got a very big per DM long time ago, quite big. And because I was doing a certain project, I focused that per DM there. Some savings I had put, some small loan I took. I was able to do something big. Do you know if you focus all your money in one place, and that objective has to be good enough, not possibly doing something that will blow up your money. You can achieve something big in a short, like building a home in a very short period of time. Unauza hizi shamba, unachukua loan kidogo, you sell part of the shares. Though I don't advocate for people selling investments that can keep growing, then you focus. That's what I think. And 2-year contract is also something risky. You need to, that's why I'm saying try to finance this from sources other than possibly the loan, because I feel like the loan at some point it can become a problem. But those are the basic. What is your biggest objective? Focus all your resources there. Liquidate assets that are not giving you the returns that you want and use them to build this home. The assets that might have opportunity to appreciate more, hizo naona sio vizuri kuuza haraka. Anza na zenye, start with the ones where the returns are very low. That's what I would do. Age aside, I think at any age, you can be able to achieve your objectives. KFC was started by a guy, that guy who advertises buckets in KFC at 65 years. Age aside, you can do anything you want.
Thank you for that last statement, that it's never too late. And I think to wind up, because it's 9 on the dot, Ruben, can you imagine 1 hour is over? There's a last question on the webinar, and I believe we'll be winding up with this one. Are fixed fund deposits a wise way to start your investment journey as a person in their early 20s? So very briefly as we close the session, thank you.
Wait a minute. Uh, something was okay. Let me repeat the question. I was doing something here. A fixed fund deposit a wise way to start your investment journey as a person in the early 20s. If you work for the bank, I'm going to disappoint you today. I know those are some of the things, but I understand you have targets, right? Everyone is pushing their agenda, and that's why financial literacy is important. Everyone is pushing a certain agenda. Once you understand financial literacy, you'll be able to know which agenda to follow. Aya. For anyone in their early 20s, there are so many ways where you can put your money. And the return is very important. You'll find that there are fixed deposit. You can actually do a current account for your normal operation. There's a fixed deposit that is giving you a certain rate. There's money market. You can do a treasury bill. You can pull together with other guys. Then you can buy a plot for 300. Then in 5-10 years, it will be even 1 billion shillings. There are so many ways to kill this cat. But in terms, if you are talking just money somewhere liquid, you realize that money market, I think right now is at 12 to 14%. I think fixed deposit most of the time doesn't go past 10%. Most people don't know that because they have not invested in some of these trainings and financial literacy. Money market may be a better way to keep your money. But remember, we keep money in accounts as a temporary location, a staging area for those who have done IT. It's a place that is temporary for another investment. The eventual goal of putting money in a bank in money market, which will give 12%, is so that you can use that money for other purpose. It can be a business, it can be buying land, it can be buying shares. You accumulate that money there. So for this young person, I don't know where they didn't need to define what they want to achieve in this life, right? So that they know if putting this money in a fixed deposit is the wisest way. But I've said clearly, look for places with higher return. Money market is one of them. And I think it's a very good vehicle. It is also safe. It is very hard to fear a default or something like that. And for that, always ensure that wherever you are putting your money in is a regulated vehicle. Go to Capital Markets Authority, Nairobi Stock Exchange website, Central Bank. Don't put your money with companies or enterprises or entities that are not regulated, because that's another thing people are doing. So that's the way to answer this, but I feel like whatever their bigger goals in life matters a lot so that they can drive. Kama ni shamba ananunua, I'll tell them to start right away. They may not need to put their money there. Come, go and negotiate for a deposit, and then you start paying either monthly pool resources. And if you can't start from there, weka hiyo pesa kwa sako. And then you start saving. Ikifika mahali you can borrow 10 times, 5 to 10 times, you come and buy an asset that can double or triple in value. When you are young, actually, take more risk. You have a lot of time to recover, right? A lot of time. Not to say if you are 50, you can't. If you are 50, most likely your risk level may be lower, but you can still do things. But if you are young, my friend, take so many risks, financial, otherwise, in a small way, you learn so many things. I believe that's the guideline I can give for that question.
Asante sana. So we have 4 minutes overboard, and we do appreciate your patience as we had to answer that question. There's a last one that Ruben, as you say, bye to us. Whether username offers short-term courses on real estate investments, they want to get into that space. But otherwise, I really want to appreciate that you have taken 1 hour of your time, Ruben, and also really had to condense all that information that you've garnered with experience and also with learning into that 1 hour. It's been packed. I want to appreciate everyone who's been watching us from our Facebook Live and also the webinars. This webinar is the third of its type. Next Thursday, it's the last Thursday of February, and we will be having our last session with username. And really, Ruben, this time I want you to focus on land, purely on land, because that's one very thorny issue. I know we had lined up something else, but if you can oblige that we just now delve deeper for 1 hour into the conversation around land. So over to you as you just answered that last question of whether username has any short-term courses. How do you handhold people to get into the real estate space? Thank you.
All right. I listening to I listened to someone the other day, and they were really insisting, depending on your career and your area of expertise, I think it's very important to mentor other people. Even if it's one person, right? The best way you can. We have really been trying to do that as username investment. People know us for affordable land for investment, and if you want to invest in a home, either immediately or in the next 2 to 5 years, very affordable properties, 200,000 to 1 billion shillings. 99% of our properties are within that range. So everyone is covered. We do value additions to them. I have to say this, very important, because you don't just sell bare land. We want you to be able to build a house, a water, electricity, and all those things. And we are doing a very big gate in Nakuru. So those are some of the things. We are not training institution. I may disappoint you. We don't do training. We just empower people to be able to invest and build their own homes by offering them these are affordable properties, and they are ready to build most of these properties. That's what we do best, and we have properties across the country. Currently, we are in Nakuru. It's a project called Delight. And I think we almost are looking to where we can get phase 2, because phase 1 is almost being sold out, 799,000. I had to say that, but in terms of mentorship, I think this is the question they're asking. We don't do those formal trainings. This is things I did computer science myself, and I have done a lot of work in computers, but I've trained myself on investment and real estate over a period of time. I've also been doing so, not training. I invest, by the way, and it helps me learn a lot. So what I do, if you go to our social media pages, look for username or username properties in TikTok, in Instagram, username investment in Facebook. We have the biggest following there. What we do every week, we produce content, especially for real estate. I do a show every Thursday, every Thursday fortnightly. Like we did a show last week, we are going to do another one next. It's a live show. We cover various topics about real estate investment. I also cover about investment, but because of advancement in social media space, I'm also in TikTok. I'm talking a lot about business. You can look for Ruben Kimani 001 in all platforms, even LinkedIn. You'll find some of these videos. That's how, because I realized I'm not able to meet all the friends, all the people who didn't want to get to sit with me. If I get a chance, I do it. But for me to be able to reach as many people as possible, we produce some content online. Ruben Kimani 001 in all platforms, including TikTok. You'll find me there. Username investment in all platforms. We produce those shows. You can learn a lot about real estate, because what we share, like what we are sharing today, apart from the last few sentences, has very little to do with the plots we are selling. But I just want everyone to understand what investment and finances is all about. By the time you are coming to buy plots from us, I know that would be it is actually meeting a certain need. You understand what you are doing. You're not buying because Daktari is buying. You are buying because it meets a certain need based on your personal objective. Pengine unataka kujengea familia yako hapo, mwingine anataka kuinvest. That is the essence. If you go to shares, there's another reason. If you go to money market, there's another reason, right? That's what I want you to understand.
Yep.
That's what I do. Please follow me if you can. Where I'm able to organize other seminars, webinars like this one, I will do that. But we don't have trainings. But we can refer you to those guys we mentioned. They also do a good job, by the way. And you can look for other courses for yourself. Even in YouTube, I've learned a lot from people who are authority. I usually vet my sources of information. I don't want to listen to just anyone. Some people want just to increase your blood pressure or lower it. The other people want you to get very angry. Of course, we also have haters and other people. Please, for finances and real estate, for entertainment, okay. But for finances and investment, don't go to that location. I hope I've answered that question, and I'll be willing to be available if I invited in a circle in your company. I go talk, by the way. I come and share what I know and my experiences. You can invite me somewhere. I'll consider to come. I'll be glad to come.
Thank you. Thank you so much, Ruben. And I think I will request my Pillars Divas. I have a charmer that's called Pillars Divas to personally have a session with us. So asante sana, and thank you for also giving us of your time. We don't take it for granted. And viewers, thank you for hanging in there for another 11 minutes. I want to draw this to a close. So follow Amakove Wala YouTube. This session will be uploaded there, as well as the other 2 sessions. And next Thursday, same time, we'll be right here. Now digging deeper into the real estate, the real matters of real estate. Thank you and have a good evening. If you're in Kenya and anywhere else, have a blessed day. Bye-bye.
Bye-bye. Thank you. God bless.
Zanim Investment Limited, a tradition of trust.